Welcome back to Morning Brief, brought to you by Invesco. A crackdown on big tech, the European Union ruling against Apple and Google in two landmark legal cases this morning. For Apple, the court sided with an EU order from 2016, determining that the company had struck illegal deals with the Irish government that allowed it to pay virtually nothing in taxes on its European businesses. Now, for Google, the court agreed that the company gave preferential treatment in search results to its own price comparison shopping service over its rivals, both companies facing billions of dollars in penalties. Needham senior media and internet analyst Laura Martin joins us now to discuss this further. Laura, it's great to see you here this morning, and thanks for taking the time. Let's start with Apple specifically here. I mean, this Cork, Ireland business has really come into focus over a couple years now. We remember back to the repatriation that the Trump administration was looking to put forward and how that business came into focus. So what ultimately does this net out for perhaps the type of fines that are going to impact the financials for Apple here from your purview?
Well, I think the check just got served. These are socialist governments where the largest U.S. bank companies that have trillions of dollars of market cap didn't pay any taxes. And these companies want their share to pay for their economies. So they're going to basically fine these companies the amount they should have paid tax based on their European revenue. I mean, I think that's the hidden agenda of the EU, is to get some money for the EU from all the revenue that came back to these US companies over the last decade since they started operating.
So do you think that this is part of a broader referendum on US-based companies operating in the EU that we're seeing come forward here, and a broader trend?
I do. I think that it was a fool's errand that these large tech companies didn't pay some tax, figure out a way to pay some tax rather than trying to pay no tax, because now the EU has nothing to lose. If these large companies have been paying billions of dollars of tax every year, maybe not the full tax rate, which in socialist government is much higher than ours in the US, but some tax rate, they would have something to lose by taking these companies to court. But these companies now are going to just fine these large companies in order to pay for their social programs.
Laura, let's talk about the other big news coming out of Cupertino yesterday, and that was a new lineup of iPhones, the iPhone 16. We also got a new watch, new AirPods. Let's focus specifically first on what's on the screen right now, the new iPhone 16. Judging by the title of your note and reading your quick reaction, it doesn't seem like you're too impressed. Why is that?
You know, not ready for prime time. Look, in fairness, Gen AI is 15 months old. And the best apps on the Apple iPhone are made by third parties, not by Apple. So they aren't there yet. So this is just too early. They're not even going to have Apple Intelligence on the phone at launch. I just think there's no compelling reason that somebody should run out and buy a new iPhone 16. You should wait for the 17 because it's going to have either cooler stuff and there'll be more Gen AI capability. The one thing Apple did that was smart is they increased their subsidies for trade-ins by like 20 or 30%. So it's like a couple $100 if you want to trade in an old iPhone, like iPhone 11 and more recent, into a new iPhone. So it's like free, but I would wait if it was me. I just nothing compelling about it. It's got new colors and it's thinner and it's made of titanium and the camera's better, as it is every year. I would say wait a year until we get some real Gen AI innovation on the next iPhone. But the one being delivered on in 10 days, not that interesting.
You know, I'm just looking at a roundup from both yourself as well as some of the other colleagues in the industry talking about this September event. KeyBank saying the September event was a modest negative, lack of positive surprises. Similar from Morgan Stanley, no major surprises. Bernstein saying it was more evolutionary than revolutionary. And we just heard your commentary there. But this all comes back to this super cycle and how much that plays into the guidance for Apple. From your estimation, what percentage of that install base would need to really go out, get this new product for that super cycle to come to fruition here?
So, I mean, I think over the next 4 years, I would expect every single person in the iPhone ecosystem to replace their iPhone because they're aging out. So the question is when that starts happening, because then we get over delivery of earnings per share. So I just don't think it's going to happen this year. So we're going to have another year of anemic growth, single digit growth, and the stock is expensive. So I think I think estimates will come down as a result of this, and I don't see a lot of people upgrading. I think they'll wait a year, and then the entire iPhone ecosystem will replace itself, and that, like, let me call it a library replacement cycle, which is what we call it in the film business when you have a new technology. That's interesting because that library, that iPhone replacement cycle will drive 2 years of over-delivered earnings, and that will be interesting. But I don't think it will start this month and this September. It will start maybe next month, next year.
Laura, when it comes to the announcements that we did get from the watch and from the AirPods, talk to us about whether or not, and I believe it's yes, just judging from your note here, but whether or not you see that locking more consumers into Apple's ecosystem and how big of a driver that's ultimately going to be here in the near term.
Right. I thought that the watch and the AirPods pivoted strongly towards health, which I think is really interesting because strategically it's trying to make the iOS ecosystem a must-have, not a nice-to-have, especially for older demographics. So they're doing more and more things that use all of the data that you have on that handheld computer called an iPhone, and they're using it to track sleep apnea, which is apparently undiagnosed in 80% of the world's population, according to Apple. And similarly, hearing loss, which is undiagnosed in 75% of the world's population. So to the extent you become more dependent on that device for your health issues, and all of that data is privacy locked in your device, that is a really interesting competitive advantage and competitive positioning for the iOS ecosystem and their ancillary products. So if you convince somebody to buy a new Apple Watch because they're worried they have sleep apnea and you wear it to sleep, that gets them to then backwardly integrate into the iPhone or stay in the iPhone ecosystem longer. So these ancillary products do create ecosystem lock-in for Apple, even if they're doing sort of a bad job on their iPhone specifically.
Laura, I want to switch gears here just a bit and talk about one of the big headlines that has been affecting your coverage list when it comes to the DirecTV Disney blackout. We talked about that a lot with Monday Night Football last night. Now we had the presidential debate tonight, and some viewers could be impacted. I'm curious just from the backlash, what you think that looks like. Obviously, this isn't the first time we've seen this type of standoff happening within the industry. But what does that ultimately do you think, just in terms of, I guess, pushing more people to then likely opt no longer for cable and go for some of those streaming options?
Yeah, so everybody loses. So content and distribution are complementary networks. They both win together and they both lose together. This is inevitable because Disney keeps wanting to raise price, and they get, because of ESPN, like $12 a month, by far the highest price, and they get paid for every customer, whether or not that household watches sports. DirecTV wants to pay less. It doesn't want to pay as much because it has negative margins in the cable business, basically. So these kinds of disputes are going to become more and more common, in my opinion. So I'm not at all surprised by that. My guess is it will be resolved because NFL season is too important for DirecTV, and they don't have Sunday Ticket anymore. So I think it will get resolved, and it will get resolved, in Disney's favor probably this round. And if I was DirecTV, I'd just do a shorter deal, 2 or 3 years, but get ESPN back on the air for the NFL season.
Laura Martin, Needham, Senior Media and Internet Analyst. Laura, always great to grab some of your insights. Thanks so much for speaking with us this morning.